in the past several years, gold got killed when yields went up. Gold got killed on a strong jobs report. Not now. Gold went up. That's why I don't think there's much risk in the gold trade. Because believe me, if we had a weak jobs report, gold would have been up a lot more than $37. So in my opinion, it doesn't matter what the numbers are. Gold's going up no matter what. It's just that it'll go up even more on weak economic news than on strong economic news. But whatever the news is, gold is going up. Gold is being repriced. Central banks are increasing their gold reserves. They don't care. They don't care about the Fed at this point. They don't care how many rate cuts we're going to get this year. They don't even care if we get any rate cuts this year. None of it matters. Gold is going up no matter what.
Gold surged by $27 and smashed through the $2,350 barrier to reach an unprecedented high of $2,354 in Asian trading on Monday. PeterSchiff observes a shift in the traditional pattern where gold prices typically declined due to rising yields and robust jobs reports. Instead, gold prices are now increasing despite rising yields, signaling a repricing of gold. A Chinese official revealed that the People's Bank of China continued its gold purchases for the 17th consecutive month in March, resulting in a rise in bullion held by the Chinese central bank to 72.74 million fine troy ounces. Additionally, the World Gold Council reported a 19 metric ton increase in global central banks' purchases of gold in February, marking the 9th consecutive month of growth. Schiff emphasizes that central banks are bolstering gold prices by increasing their reserves, prioritizing long-term asset preservation over short-term Federal Reserve policies or potential rate cuts. The anticipation of substantial gold purchases by global central banks later this year drives market expectations and pushes gold prices to new record highs. Schiff highlights the mounting inflationary pressures, which are eroding real interest rates. Market participants foresee the Federal Reserve maintaining accommodative monetary policies, fueling inflation concerns, and supporting gold prices. However, the sustainability of gold's record-setting rally hinges on upcoming events like Wednesday's release of the Consumer Price Index from the United States. Come along as we explore the valuable insights provided by PeterSchiff. Don't miss out on our latest updates. Subscribe to our channel and activate notifications. Thank you for tuning in.
So as soon as this stronger than expected number came out, just like Pavlov's dog, right, these programs sold gold. So gold initially went down, but it didn't stay down because the real money, the real buyers came in and bought what the programs were selling. And then gold just spiked because this is a real move. The real gold buyers don't care about these jobs reports. They probably realize that they're BS. They don't care how many second and third jobs, broke Americans are forced to take because they can't pay their bills. They don't care about all this. They're buying gold. Bond prices got clobbered again today to end a horrific week for bonds, setting up a bloodbath. The yield on the 10-year now back up to 4.38, and on the 30-year, we're 4.53. So we're now closer to 5% than 4%. Now, in the past several years, gold got killed when yields went up. Gold got killed on a strong jobs report. Not now. Gold went up. That's why I don't think there's much risk in the gold trade. Because believe me, if we had a weak jobs report, gold would have been up a lot more than $37. So in my opinion, it doesn't matter what the numbers are. Gold's going up no matter what. It's just that it'll go up even more on weak economic news than on strong economic news. But whatever the news is, gold is going up. Gold is being repriced. Central banks are increasing their gold reserves. They don't care. They don't care about the Fed at this point. They don't care how many rate cuts we're going to get this year. They don't even care if we get any rate cuts this year. Gold is going up no matter what. Now, the only thing that I think could cause the price of gold to go down is if the Fed hikes rates. And I think the probability of that is practically zero. It's not zero because obviously anything can happen. And the Fed should raise rates. But I don't think they will, especially with an election coming up this year. And the longer they wait to raise rates, the more damage it'll do to the Biden camp when they do hike rates or to the markets. I don't think they're going to hike rates. And so as long as the market knows that Powell's not going to hike rates, then just keep buying gold because inflation is going up. And if inflation is going up, that means real rates are going down. So if the Fed just stays where it is and inflation keeps picking up speed, which it's doing, and the Fed's going to do nothing about it, well, that's going to erode confidence in the dollar. That's going to erode the value of the dollar. Plus, we're on autopilot on the deficit spending. The sky's the limit. They keep passing new spending. Nobody cares about cutting government spending. Biden doesn't care. Trump doesn't care. And so the holders of dollars are getting out and they're getting into gold. And this trend is going to accelerate. That's why I'm saying there's very little downside risk as far as I'm concerned, yet there's massive upside potential. So this can't last. The prices can't stay this low much longer. Now, CNBC, they do mention gold, but just casually. They don't make a big deal about it. Hey, gold's going up. And every discussion about gold, they say, well, it must be because of the geopolitical situation. That must be driving gold. That's the assumption they make. I mean, they're clueless. They don't even want to consider for a minute that gold is going up because of inflation, because the rate cuts are a mistake, right? Because their rosy scenario of a soft landing and rate cuts and 2% inflation is all a pipe dream. Right? They don't want to admit that. So they're trying to figure out why gold is going up because they want to hold on to this myth that they believe in.
The recent surge in gold prices has sparked speculation among market analysts, drawing comparisons to the commodity rally between 2004 and 2008. Gold catapulted from under $400 to $1,900 during that period, marking a remarkable five-fold increase. With gold hovering around the $2,000 mark, prominent figures such as Schiff suggest the potential for history to repeat itself, projecting a further five-fold rise to $10,000. Despite a robust non-farm payrolls report for March, the resilience of gold prices in the face of a relatively unaffected dollar has fueled optimism among investors. An esteemed economist, David Rosenberg, anticipates a 15% upside in gold prices, with the possibility of a 30% increase looming as central banks contemplate rate cuts. He points to gold's historical negative correlation with interest rates as a driving force behind this projection. Federal Reserve Chair Jerome Powell acknowledges challenges from softening labor markets and interest rate pressures, which could potentially lead to subdued inflation. Schiff warns against Fed rate cuts, fearing they could fuel inflation, drawing parallels to the 1970s commodity boom. Let's get back to the interview.
Between 2004 and 2008, we had this big run in the CRB. And during that time, in fact, actually going back earlier, but gold actually went up 5x from 2004, or maybe 2002, because it was under 400 and it went to 1900. That was by 2011. I think by 2008, it was only at 1,000, but that was still more than a triple. If gold does another move similar to the 2000 to 2011. And if you look at a chart, to me, that looks like it's going to do that. Gold's going to be $20,000. $10,000. It's a 5x move. Gold moving from 400 to 1,900, actually below 400. That's the same thing percentage-wise as gold going from 2,000 to 10,000. So it can be done. It can happen. I think it will happen. And the Dow, I think, is going to go down. People are excited today. Hey, the Dow's up 300 points. Yeah, that's 0.8%. Gold was up 1.7%. That means in real terms, the Dow was down. In fact, year to date, even though the Dow is up 3%, gold is up 13%. So the Dow is down 10% in terms of gold. I think it's at 16.75 ounces. I think it's going down to 2 ounces, maybe lower, because the all-time record low is around 1 ounce, where we have a double bottom in 1932 and 1980, approximately. Maybe it was 81 or 82, but right around there. So, there's a massive bear market that's going to happen in the Dow, stealth bear market in gold. Whether it has a bear market in paper dollars doesn't even matter. What matters is what's happening in terms of real money. But getting back to the CRB. So look at that move from 2004 to 2008. I think we're going to see a move like that in commodities. It's a big, huge move. Now, look at what the inflation rates were during that time period, right? So that's 5 years. And you can see that chart. That whole move happens during those 5 years. The inflation rates were 2.7%, 3.4%, 3.2%, 2.8%, and 3.8%. That's it. Not a single year was anywhere near the Fed's 2% target. Now, during those 5 years, the Fed raised interest rates 17 times, and 17 rate hikes didn't stop the commodity market from rising. The only thing that stopped it was the 2008 financial crisis. Now, unless you think we're going to have another financial crisis, which we could, it will be worse than the last one. How is commodity prices going to stop rising? How is gold going to stop rising if the Fed's going to start cutting? Because if we had this huge move in commodities and gold, at the same time there were 17 rate hikes, what makes you think, or anybody think, that we're going to get rate cuts now and commodities are going to fall? No, the Fed would be throwing gasoline on the fire. So this is going to be an explosion across the board, like the 1970s. All commodities, agriculture, industrial metals, precious metals, energy, all this stuff is going way up. Now, how you can look at these commodity charts and think that inflation is going down. I mean, headline inflation is going to go through the roof based on what's happening here.
As the gold rally gains momentum, anticipation mounts for the participation of ETF buyers, further fueling the enthusiasm surrounding the precious metal. With this anticipated catalyst still on the horizon, financial giant UBS has revised its forecasts, projecting even higher gold prices. The firm now expects gold to trade at $2,300 per ounce by June and to reach $2,500 per ounce by the end of 2024. What implications does this have for investors? Share your thoughts in the comments section. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.